Does a crash start on Monday? We're going to be talking about that as we get into some technical analysis for the SPY Qs, Apple, Tesla, Amazon, NVIDIA, AMD, and Meta, looking over at AMC and GME with a few other things to pop into after that. So make sure you pay attention to the whole video because sometimes one stock can give you a hint. I know people pay attention to the things they like to trade. Maybe you're just paying attention to the market. Well, if you're seeing that we're having some interesting signals, which we do right here, and you're noticing that a big stock has some kind of reversal signal, that can really help you out in getting some kind of hint. So today we're going to focus a lot on the structure of the SPY as of right now because it looks very interesting and getting you guys those weekly expected moves that we do every single Sunday. So tune in, get ready, buckle up, and let's get started. The first thing is we got to get you those weekly expected moves. Those are going to be 592.38 to the upside, and we do have 576.80 to the downside. If you're new here, we use the options data to calculate a range that gives us a 68% zone of where the options market would like to land with a 68% confidence, which means you have a 32% chance to see something crazy, but 68% of the time you will land within this zone. These two purple lines here, you can come back every single Sunday and get that for completely free for the SPY and the Qs. If you need it for the individual stocks, because it is very, very helpful. We talk about this a lot in the course. It is so helpful when taking profit or looking for a reversal play. It can really help you out. So look at that down in the description for Patreon. $7 a month to get one of the most useful tools and get some of the best support and resistances that you can have on your chart. Now, this is one example where we hit a daily expected move. We opened up at the daily expected move, and you saw that we closed back within that range because we went right up to it. We can use it as resistance. So we need some daily expected moves for tomorrow. We do have 587.32 to the upside and 581.86 to the downside. Pretty small range going into tomorrow, but this is our 68% zone for the SPY for Monday. So we need to pay attention to the structure here, right? We were talking about the structure of this being, one is actually looks pretty bullish, right? Cup and handle. So that is looking like it's still turned up, has not crossed over on this MACD to say this is going to fall down. But this right here is exactly what we're looking for. If this is going to get bearish, right, that's a pretty bullish look. And I think we should expect positivity as the trend is still positive until this actually does cross down. And that can happen early on in the day on Monday. And you do not have a big range, which means seeing something crazy would take people off guard. It could take the options market off guard. So is this going to start on Monday? Is the cup and handle going to play out to the upside? Something I'm leaning a little bit towards as we open up a 2-hour chart. But if this 30-minute does cross down, that would mean negativity. If that can go negative, then that's going to be a little bit more dramatic. If we can hold up at a daily expected move, maybe we just needed another bit of consolidation and we turn up into positive territory, continuing the positive trend. And you notice this blue staggered line. This is the 5-day moving average on a smaller chart, right? It pops up on all my charts now. You really have to lose that and remain below that in order to see a downward trend. The 5-day is very, very important. You notice when you start to lose it, you start to reject off of it a bunch, head down to lower levels, you retake it, gain it, retake it, and then you head to the upside. So this is something very helpful. This is something I'm going to play with on my smaller charts. And we're going to look into this, but I can teach you how to get that later on. For now, we just want to see, is this 30-minute going to cross down, or are we about to see positivity? Well, positivity might be as simple as, does this 2-hour curl up into positive territory? Do we see some kind of sporadic move to the upside very early on in the week that gives us a divergence point to play with? That's something we're going to be paying attention to, but I do want you to notice that we are in a bullish trend. You have 592.38 to the upside, and where's your monthly expected move for October? Well, that's going to be 593.83. So it would make total sense for us to get up in this area at some point in October. So just pay attention to that. If things start to curl up, we can get to those levels. Very important to understand. Now let's go hop into the Qs. Qs, the reason that we're paying attention to a 2-hour that can turn up is because the Qs actually turned up their 2-hour really close to the center line. So you do have divergence up here, but maybe you're going to go make a little one right now. Now this does look a little flaggy, so we're going to talk about the opposite side of that as well. But 2 hours curled up, positivity is the most likely option. Now we want to see if those shorter time frames are fitting in with that, right? We're kind of proving that. So we're going to go over that in a moment after we give you those weekly expected moves. 503.93 to the upside. We do have 485.01 to the downside, and you have a pretty dang small range for the Qs. The Qs have had a pretty good range daily, and now you have kind of a small one. So 498.01 to the upside and 490.93 to the downside. Now, one thing about this pink line, you're probably wondering what that is. That is the yearly expected move. So that is as high up as the options market saw us going for all of 2024. And I want you to notice that bad things do tend to happen up in this area, and we are outside of it again. So looking for reversal signals in here will be important. If that 2 hour flashes up and curls back down, another divergence point might be there. But as we go into the shorter time frame, something I wanted to point out was the fact that this is very looping up. It's looping up, but it is relatively controlled. So if we were going to break down, well, we're going to lose this little trend here. We have to lose that 5-day moving average and start closing back below that annual expected move for 2024. As of right now, it looks like we are trying to do some kind of cup, some kind of handle, but we haven't seen that breakout moment. So we want to pay attention to any time that 30-minute does cross down. But I want to be very clear here. We have taken back the 5. The 30-minute has not crossed down. That is positive. The 2 hour is positive for the Qs as well. So this does lead us to believe we need things to turn down for early on in the week for us to get bearish, because this overall does have the opportunity to continue the trend from here on forward. So we'll pay attention to it for you. But those are the important things I think you got to pay attention to for the Qs. Seeing if that 30-minute rotates down, well, that's still relatively, right? It's a little bit positive. So we could dip down to a daily expected move, fill a gap, and turn back around, right? We might just need to go grab buyers. This is why it's important to trade like water. This is important to this is why it's important to manage risk, right? Manage your trades. Actively managing trades can really help. If I am bullish in this area and I see a 30-minute curl down, I don't want to be bullish, right? I don't want to have calls anymore, because that means down is the most likely option. Even if that's a pullback, that can really beat me up. And the opportunity might be there if this just curls back up. If this just curls back up into positive territory, my timing might be a little bit better with this play to an upside move. So that's something I'd be paying attention to for the Qs. One thing that kind of worries me about Apple, we went over the bigger time frame, showed how this could be some big tops happening right here, and these might just be traps. And I'm slightly thinking Monday, if this is going to cross over, we might get island reversal, just leave this thing on its own and start going the other direction. If we can lose the 5, I think that would be bad. But there's a key reason I'm paying attention to this, and I understand that the price action took this above, and it's not the best divergence here, but I'm just showing how this can curl over, and it's a little bit closer to the center line, closer to going into a negative trend. Now, this has not crossed down. That is still overall bullish, but as we open up a 2 hour, you're going to see how this is starting to look like some kind of double top could be forming here. It looks eerily similar, a little bit more spread out on this one, but a little bit similar to what was going on here. And you'll notice that we've held those divergence points almost all the way across all this. So that does mean there's weakness in momentum here. If something bad happens, if you can really cross over this 2 hour MACD, we can start to head down on the daily scale, and that's going to be worrisome from Apple. So early on in the week, we kind of have to figure out, and I think after a little bit of price action, we'll know if this is a trap, as the dollar is suggesting that there is a bunch of insider selling going into cash, and maybe this is a way for them to trap people to the upside, shoot Apple higher, get people euphoric on a big stock, and then just curl down a 2 hour MACD and everything's done. So I would really be careful with Apple early on in the week, because this could be some kind of trap. Obviously, it is still turned up into positive territory. I just don't think it's a good opportunity right now to the upside. Obviously, the 30-minute hasn't crossed down either. So we really have to see early on if that's actually going to cross down into negative territory for Apple. If not, it will most likely continue that positive trend, right? If this is more controlled and can hold up and retest a level and curl back up into positive territory, you might be talking about a cup and a little handle here. So that would mean that this could get by the center line and curl up into positive territory. But for now, this really looks like some kind of trap from Apple to me. Tesla, you can tell, has been very fishy. This is very, very fishy behavior from Tesla, because Tesla has some of the biggest implied volatility every single week in the options data, and it has even more implied volatility this week. So if we don't see anything this week, then something fishy is happening here, because this has like 78% implied volatility for Friday close, and that's just something that usually does move stocks. It's something that we talk about with AMC and GME, right? AMC and GME, I think the suppression is there because they always have extremely high implied volatility, but you barely saw moves during those weeks. Now, as volatility is coming down, you're actually seeing bigger swings, which is funny. So pay attention when we get over to AMC and GME. They have some of the lowest implied volatility this week, and everyone was paying attention to them when it was super high, but that means the market makers were paying attention to them when they're super high. So I would pay attention when they're actually a little bit lower, easier to see something crazy. So one thing to notice here for Tesla is no reversal signals on the 30-minute, no reversal signals on the 2-hour. This is deep into negative territory, meaning all of this could just be a retest still of the 5. And then if you curl down on this MACD, you're gonna head to lower prices. And that's why it's good to have a weekly expected move, because if we see a divergence form at those lower prices, well, that could actually be a good thing for Tesla to see a turnaround. So we'll pay attention to that for you. Be careful around earnings, guys. Earnings is always a sketchy thing. Technicals kind of can get thrown out the window, and you can really see, hey, they could say 10 good things and 1 bad thing, and the stock goes down. So a little careful with earnings is how we always say it. We always say manage risk, meaning if I'm going to play earnings, I know there's more volatility during earnings, so I can use a smaller position size and not risk a bunch if I have to take a play. One thing to think about, though, for Tesla is this thing on the 30-minute is just very, very wonky. So it's going to be very difficult to trade. I'm just going to be honest about that. This is one that I believe will be very difficult to trade. And weirdly enough, you are taking back the 5, right? You were able to get back above the 5. Can you see that breakout maybe for a retest of a key area and then see if sellers do step in one more time as you are trapped between a sell zone resistance and a buy zone being support? One thing I'm a little bit worried about for Amazon is this right here. I really think that we wanted to stop here and make that handle dip back down, because when you break out of these zones that we make, right, we talk about this a little bit in the course. A lot of the time you want to break out, retest in, and then go for another ride. And you can still do that here. You're still positive, right? You're in positive territory. So even if this curls over, it's a little bit further from the center line. So if that curls over, I have to pay attention if that's turning around at any point. And the good part is if there's a weekly expected move somewhere in here, you kind of have a hint of, hey, if that's curling up by a weekly expected move, that's going to be used as support. That's how they are very, very useful. Join the Patreon. It will really help out your trading. But for the most part here, this could be some form of divergence. If we pull up a 2-hour, you're just going to see it pretty clearly. You have the divergence points here. So if this 30-minute does not turn back around and too much selling comes in to break through this trend here, and we actually break through, cross over this 2-hour, I think that means that Amazon's heading down. And I'm just going to be honest about that. That's my genuine opinion going into this week for Amazon, is if the selling is too much on a 30-minute, we cross down a 2-hour, that is so close to negative territory with divergence. You can see if I blow it up on the RSI. So if that's going to happen, then that's going to be bad for the stock. And most likely what's going to happen here? Well, then the daily scale. The daily scale is not going to be able to turn up. That is going to reject, and we most likely will end up going down for some time, right? We might hit lower prices over the next couple of weeks or see something a little crazy to the downside. So that's why I want to pay very close attention to that signal. The opposite of that is if that 30-minute can hold up and we see some kind of move like this over time, well, that daily MACD might curl up into positive territory. And what does that mean? Hey, positive territory crosses up in it, positive move, right? So we can go test this high, maybe go make a new one. But I'd just be careful if that's some kind of trap at this point, because we're just looking at a point on the macro scale where we do not have much time left. I think this week is going to be one of the most important weeks in the entire year for the stock market. And NVIDIA kind of is doing what we have to pay attention to with the market, which is this some kind of cup and handle that just got a little excited, or is this actually a divergence point as you're getting a little divergence here on the RSI? You are still positive. That is key to understand. The trend is still positive. Really, we always keep saying, yeah, we're paying attention for a top here, but at the same time, we haven't seen those bigger timeframes really confirm anything. We haven't really seen confirmations on weekly scales, monthly scales. That's when we'll really know, like, hey, this thing is going to be bad. But trading the shorter timeframes, we just want to say, if this curls up into positive territory, what's the most likely thing to happen? Well, we're going to test this level. and go make a new one. Sorry for hiccuping. Always got the hiccups. So that's going to be very important to understand. We have to pay attention to the trend on the shortest time frame. Now, this chart, right, the 2 hour is saying something completely different. The 2 hour is saying there already is weakness here, major weakness, by the way. This is saying there is a major weakness here. And this is why I'd be looking out for Monday if selling does come in. So if the 30-minute does turn up, hey, we bought ourselves a little bit of time. If we make some kind of tiny little divergence here, I would watch out on the 30-minute. But if the 2 hour actually is saying anything, it's telling you, hey, this needs to pull back in some way. And that pullback, if that's too much and you go into negative territory, you might end up crossing over the daily scale, and then you'll be in for something a little bit deeper here for NVIDIA. And if this is some kind of double top, I would watch out because NVIDIA might have some kind of flash crash. So this is why we're paying attention to these type of small signals, is because it really looks like we're approaching some kind of top. And I think this is a massive, massive trap right now. And on some charts like AMD, we're actually getting some weird signals, right? Is this going to be some kind of structure to head down, or is this actually trying to base out? Well, the MACD is not looking good here. Whenever something looks confusing, I don't try to trade it, right? If a trade does not look great for me, it doesn't look obvious to me, it doesn't make me feel good about it, right? Then I'm not going to think about taking it, because this is very interesting and strange MACD behavior. If this is a double bottom, then this has to turn up and go positive. So one thing I can pay attention to is the 2 hour has curled up. So if the 2 hours curled up, that means, hey, we could get some kind of bounce, but we could hit our head on 160.83. We've used that level before. We could go to an area where we really started to break down, being the gap fill in here. So something like this would be something to pay attention to, right around that 163.20 price point. You could see some kind of bounce like that, but is this a reversal signal? No, this is just a MACD that is very deep into negative territory. So the most likely thing, if you do see positivity here, is that lower high. If we want to continue to build up with some structure and get a lower high on a 30-minute, then I assume we would make some kind of cup here, use that 160.83 to bounce that 30-minute back up, and then you can maybe see that create that low or that higher low. So that's something that I would pay attention to. But just so you are aware, with the positioning of the MACD for AMD, yeah, it looks like lower high would be the most likely scenario if we actually do go higher from this point. Meta, this was very good to point out the fact that we had divergence here and a flat top, pretty much giving you a another point of divergence, pretty much looking like a double top to me. You even got a little turn up that turned back down. So good fake out from the market makers, it seems. Look at a little flaggy in here. So this 2 hour turning down, we did end up curling over the daily, so that's good. This was a good thing to pay attention to, and I think this might have more work to be done to bounce. Maybe we need to dip a little bit lower into some liquidity. So I want to pay attention to a 30-minute right now, because the 30-minute is really close to center line. And what just happened? Notice we were trying to go into a positive trend. We were trying to maybe break to the upside, but the structure here looked pretty controlled, little flaggy, and now we're curling down on a 30-minute. So the most likely option in the 30-minute chart for Meta is going to be down. But if we go and tag some kind of weekly expected move and we look like this, maybe we go outside of a weekly expected move in some way and we create a divergence, that's going to be what I'm looking for from something like Meta going forward if we see some kind of trap early on in the week. See how Meta is really going to help me out here, because Meta has some good structure to maybe form a divergence to the upside, right? Some kind of reversal that reverses us back to the upside. So I need to pay attention to Meta a lot early on in the week so I can use Meta to help me out with the entire market right now. Now, in order for us to actually go up though, we're going to have to take back that 5. You notice that this has been going up, it evened out, and then we started going down. So that overall does mean we are in a negative trend, and that's proven by the MACD. Trying to get close to that center line and curling down means it's most likely to continue that negative trend, and we did not get very oversold on this first drop, which tells me, hey, maybe the first big drop is coming now. So I would just be very, very cautious with this. Obviously, if it turns back around, we can start to talk about bullish things again. But for Meta, you're below the 5, you're continuing a negative trend, and it doesn't look good. I can keep my eye on this during the live video. Please join us for our live videos. We're live all week long. You can ask questions about the course. You can ask questions about Patreon. You can ask questions about weekly ranges, and we answer a ton of questions. We are dedicating ourselves to helping you guys learn on this channel. AMC with an absolute rocket ship, a pretty good day, honestly, for AMC. It's very rare to see AMC get a 3.3 up day, 3.3% up day. It genuinely is rare to see that, and most of the time you're going to get a 3% down day, okay? So we're going to give you those new updated levels for AMC. This one right here, in order to see something crazy, you've got to get above 471. So 471, it looks far away, but when you put this on the daily time frame, you're going, hey, that's definitely possible, right? That's definitely possible. You need a decent reaction, but it's overall possible for something like AMC, and this is a bullish thing. To turn up on this daily scale is very, very good. But if we're going to see things continue to be fought against, if we're going to see, AMC actually get fought against, well, we talked about the fact that I totally researched what AMC did because it traded the entire time, right? It didn't really trade in the night market at all, right? But like GME did. So you were able to see some good stuff here during the day, which I like to see volume and moves during the day. So one thing I noticed was when AMC did have a big moment, a 30-minute crossed up just like this, crazy, crazy good cross up, great price action, ends at the high of the day, and then we have to see that continue because if this 30-minute rotates down, that's exactly what didn't happen during the big move for AMC. A 30-minute was not able to turn back down when AMC was seeing a big move, and something that you actually saw at the exact top of AMC when it was at, I think, hundreds of dollars or whatever it got to. Well, you saw it go to a crazy price point, then it came down, then it went to a crazier price point, but the MACD actually set up a 30-minute divergence for you, and that was where the top was solidified. So something that you can do if you do see something crazy, look out for a divergence or look out for these curvy moves from the 30-minute if we start to see something crazy, because if the 30-minute is turning down, then that most likely means we're going to pull back in some way. But if the 30-minute can turn back up into positive territory, that would be a good thing. So if this 30-minute does curl down and curl back up into positive territory, we should expect the positivity to continue. And notice we are taking back that 5-day moving average. Very, very good for AMC. GME, little different story, right? Trying to still curl up on that 30-minute. So is it go time for GME? Well, the 30-minute would suggest not yet. But the daily scale is kind of saying, yeah, it is, because you're seeing a bunch of little divergences in here. Good divergence here for that RSI down there. And what you're noticing is since then, we're trying to hold up, right? We're trying to hold up. We've created a higher low. And so if this can see something crazy, that would be awesome. So the level you need to break through to see a gamma squeeze that can lead into some kind of maybe short squeeze, right? You want to see what would really take the options market off guard and cause people to buy. Well, that level is going to be 2253. 2253 is the level that you have to get past for GameStop. This is one of the lowest levels for GameStop and AMC I have ever seen. I think it might be the lowest implied volatility AMC or GME has had ever since Roaring Kitty came back in the spring of 2024. So this tells me if this is going to see positivity, that would make total sense according to the daily scale. I just hope as a trader that I'm able to see a 30-minute curl up so I can make a decision, manage the trade, and then make sure things aren't curving back down, because if the 30-minute just continues to curl back down, then it's not the moment for GME. One thing to note about Monday is if we do get volatility early on, well, that really isn't showing up for the VIX. It's really not. You're not getting any 30-minute reversal signals in here. There's no divergence down here at the lows. You just have an extremely low MACD, which means even if we do see a reaction up, well, then most likely we do turn down for a moment. And this is where we need to pay attention if we're seeing that cup and handle kind of pulling back to a daily expected move in the SPY, because that could be where the volatility actually starts to subside. So we're going to pay attention to that for you early on in the week. But just a quick note, just remember, the crash signal is still here. The crash signal is still here as far as the 50 remaining above the 200. And we are testing the 50 right now. So that is something to pay attention to early on in the week. But we have crossed down on a daily chart, which we told you, hey, positivity is going to be the most likely option if we cross down on this daily chart. But I wasn't fully convinced until we fully crossed through that 50, because then that can lead me down to the 200. And then if we curl down on a weekly, we could end up all the way down towards 1212. And that's pretty much the biggest squeeze potential there. If we curl down on a weekly chart, you might see a massive squeeze that gets you down to 1212, and then watch out, because that daily might make some kind of divergence down at this level, right? We could see some kind of divergence there. That would be interesting. But for now, I just want to see, are we going to actually curl up and see some kind of move for volatility to bounce here, and then see if that's able to fade back down to create a stronger base, because there's no real reversal signs in here. So if we did see volatility take off early on in the week, it would definitely be because of some kind of black swan or something that people are reacting to in my book. So I guess the main takeaway here is we have a way up, we have a way down for this week, and we need to see which one is playing out. As I am looking at the SPY with you at this moment for this closing statement is, We do have divergences on the 30-minute for the SPY, but we don't necessarily see those popping up for volatility at the same time. So is this just going to be some kind of minor pullback on Monday that leads to us going up throughout the week? Well, we're in a positive trend, so that would make some sense. And thankfully, we do have some levels to pay attention to for Monday. So thank you guys so much for watching. I really do appreciate it. Thank you guys to the people who are taking the course and sending me emails over the weekend. I do appreciate that. I am glad that the courses continue to be helpful for each new person that takes it. I encourage you to get that while it lasts. It is on sale. It is 90% off because I wanted to give you guys a good price as we were approaching possibly a big top. So we're going to leave that only until the end of November. So get it while it lasts. You have a limited time to get that. And it is very good to take it right now as we are already behaving like we're in a bear market. That course, you know, a bear market makes everyone lose money. Almost everyone loses money in a bear market, but I like to make money. I make the most amount of money in a bear market. So I encourage you to take that course because you can too, all right? If you really get an understanding of the MACD, weekly ranges, divergence, all that good stuff, you can become a very, very good trader, even in the most complicated setups, which would be in a bear market. So thank you guys for watching. Really do appreciate it. I hope you guys have a great rest of your Sunday, and I look forward to streaming with you guys tomorrow morning. All right, peace out.